Hello, this is JV. I will be talking about Forex and candlestick. The, this is the power of candlesticks. Now, the reason a lot of traders, Forex traders, are making money is because of they understand the language and the power of candlesticks. Now, when you look at this chart here, I screenshot it so that I will discuss more about it. So, want to look at how powerful they are. Now, as you see them, they are languages. Candlesticks to forex traders are languages that will tell you, wait, go, or come. Or I'll put it this way, it's going up, it's still ranging, or it's about to go down. Now, all these things are happening in different time frames. Now, what do we mean about time frames? When you look at this chart here, let me look at it and make it bigger so that you can see clearly. Now, at this point, you can see something here. Time frame here is 4H. 4H means that each of these candlestick is 4 hours. It does not matter how big or how small the candles are. Once it is one candle, that represents 4 hours. So the message or the language or what is saying is that throughout these 4 hours, market goes up, come down, goes up, come down, and then close at a certain price, meaning that based on it here now. So let's look at it here. Candlesticks, if you don't know the meaning of candlestick, you don't know the power about candlesticks. There are different types of candlesticks. Let me just talk about a few of them. Now, there's what they call bearish candle and bullish candle. Why is it called bearish candle? Bearish candle means that the closing of the candle is lower than the opening. So if the candle opens here, then it closed down here, it means that it closed here, that is a bearish candle. Now, if it opens here and then it goes up and close at this point here, that means it goes up and that is called bullish candle. Now, the candle here, you don't just assume that a candle is bearish or bearish or bullish or bearish. It is because how do you know either is bearish candle or bullish candle is that any candle that close. Let me use this. Let me use in this manner for you to understand it. This movement that's from here. If you look at this market from here downward, this one is bearish, bearish. This one is bearish again here. That means the market closed below the opening. Now, in Forex, you need to know these candlesticks very well. Now, at times, you see what they call pin bar, doji, then we see the kind of Aramins. You hear something like, some candlestick patterns. Now, candlestick patterns could be 2 or 3, 3 candles that are together, cluster, meaning that they can call it bearish engulfing, bullish engulfing. Why is this sounding like bearish engulfing and bullish engulfing? The bearish engulfing means that the next candle close below the close of the bullish. Now, let's go straight to this point here now. So in 4 hours, when you look at this chart here now, what you see here is that all this each candle here, they are happening within 4 hours. And between the 4 hours, it can go up and come down, go up, come down, come down. Throughout before, so at the end of the 4 hours, it will not close at a certain point. So, and again, if you look at this candle here, this is a reversal candle. This candle shows that it is called they call it piercing pattern. Something piercing because it closed above half of this candle. If you look at the half of this, so it closed above it. So meaning that it's above it. Then it has moved. If you look at the market, has moved in a downward bearish. It goes down and it has reached the point where you want to reverse in 4 hours, according to 4 hours. But if you look at another time frame, it will be different candle patterns it will show there. That's the reason why we will talk about top analysis next time. That will be another time. Then we'll talk about top down analysis. Now let's look at the 1 hours. This is the same pair, which is still the same thing. 1 hour. This is GBP USD. The same what you saw in 4 hours. This is how it look like in 1 hour. Now, when you're looking at 1 hour, there are some messages it's communicating here that it will not communicate in the 4 hours. So in other words, every candle here is 1 hour. And then the more you see them here, either they're small, big, it does not matter that big. Every candle is 1 hour. So that is to me that this time frame has shown what has happened so far. Looking at this here, it seems that this place is acting as the resistance, which anything can happen, and then there's another point here which is showing as support, meaning that anytime price will come in there, it will touch it and go up, and when it reach there, it bounce back, reject it. But later on, it can close below it and start selling again. So that place is not really a good place to trade because it is forming as support, it's also forming as resistance. So at the end of the day, what when you see a rejection here now, it goes up here, before you know it next time, tomorrow you think you want to buy again at that point, it will just close below it, meaning that it will sell below it and then turn it back to selling. And this is how Forex happens almost every now and then. All you have to do is to ensure that you enter the market at the right time. You are buying at the right time. Now, buying here is not a bad idea, but buying at the wrong time, because the time when markets want to sell below it, you may buy and the price will keep on falling. So that is about 1 hour time frame of that chart of 4 hours you saw. Now, that is to show that Forex, the candle will tell you, if you see candle like this is called armor. This is armor candle, armor, because this is more, it can open here and close here. It can open here and close here. So any of the two is still armor because it has small movement here. It's the body and the long wick. This is wick. They call it wick in Forex, and then this is called body. Why is it called body? It's called body because this is where you see the open and close. Anywhere you see open and close, that is the body. But anytime you see wick like this, that is called wick, meaning that anytime you see a long stick like this, it's called wick, meaning that market open here or open here and sells down and also buy at the same time on that particular time frame and then close here. So this candle can be 5 minutes, can be 30 minutes, can be one day. So it does not matter the candlestick. So now, when you see this candle like this, it can be interpreted as a buying opportunity because there's a rejection at this level here. This is the low, this is the open or close, this is open or close, and this is the high at the same time. So if you look at it now, that is just an example out of many candles that you keep on seeing every day. But your time frame, the frame you are selecting can actually make you to lose your money or your capital, or you make more money in the market. So market does not care about your feelings, does not care about what you think. It only cares about what you want to do. And again, events happen every day. So tomorrow now, anything can happen. The news can say they want to sell, there's more high supply. The market will fall. When there's more high demand, market will go up. But the time that it will happen, you may never know. Sometimes people will just enter market, buy, and the market will move because that is the time when market wants to move, and then they will just go along together. But you know what? This is power of candlestick. All you need to do is to ensure you know candlestick very well. Then the other factors you need to consider before you buy or before you sell. If you sell when market has changed the direction, because there's what you call support turns to resistance and resistance turns to support. Why is this like that? Support is to buy, resistance is to sell. But if you are buying at the support level to maybe yesterday and last week, and then this week, by next week, if you go and buy again, when you used to buy, thinking that it will buy, that place can change to selling point because the fear and also the greed of the traders, and as well as those who are moving markets, they can easily do anything and do certain things and sell and they buy at the same time. Those who are edging, they can sell and then buy. So, and I will talk more about these things on this channel because in Forex, it is very wide. You cannot exhaust it. Not because it's so difficult. It's just that there's need for you to have more psychology to build your market psychology than just technical analysis. Technical analysis is not that hard to understand, but just that market will not display to you what is happening. It's for you have to know that you have to project where the market is going, and you also have to have the idea, the range of daily range, weekly range, monthly range, and then so that when you see market has moved to a certain level, you should be careful on how to chase market. And as most people want to change market, they also don't know much about it, that market can also reverse at the point when it has gotten exhausted. I know what? Everything about Forex is about timing, time of entry and time of exit. If you don't get the right time, if you don't know where to get in and where to get out, and if you don't know how to manage your capital very well and take the proper risk, you will lose your funds. Or if you risk high, you will get reward high. If you risk low, you get small reward as well as more small losses. But that's how it Forex is. So this is what I can go today. See you next time.